Sir, rising imported inflation and pickup in the CPI. Do you see inflation, India's inflation breaching RBI's trajectory? And would that cause RBI to take a preemptive rate hike this year?
RBI has been very careful in giving a range of plus or minus 2% over 4%. Right. Therefore, their projection on the upside only will work now. So 4 to 6% is a very safe level, and I don't think CPI inflation will cross at any point of time 6% level. So therefore, there is no reason for any preemptive rate rise from RBI. At the same time, the next move by RBI can only be hike in the rate, but not any more cut in the rates. But the hike may not come immediately because the market itself has realized that the rates have to go up. Right. If you look at the money market yields, it has gone up significantly. CPs or other instruments, it has already been factored in. Right. So therefore, irrespective of the hike by the central bank, the markets have already acted, and some of the banks have already raised their MLCR rate, minimum lending rate, whatever they call it. So therefore, I see that for some time, maybe up to June or July, I don't know what is the date of the next RBI meeting. Next RBI meeting, there won't be any changes. Post the next meeting, there is a possibility of a 25 basis point hike in the key rates, which may make the banks to increase their deposit rates and also their lending rates as well. The domestic investments has become very large in mutual funds, with the result that the deposit growth with banks has come down, whereas the credit growth by way of retail loans has tremendously increased in the banking system, leaving the market to have slightly tighter liquidity, which I think RBI will bridge over a period of time.
Sir, also, how many rate hikes do you expect from RBI this year?
Not more than one. Not more than one.
So now talking about bonds, how do you see the 10-year benchmark index by the end of March and next fiscal year?
See, when you say 10-year bond, a new bond has been issued for 2028, which is now the benchmark bond. Right. 2028. That bond is traded now today at 7.71%. I am not talking about 2027 bond. I am talking about the benchmark bond. Yeah. So 7.71 till 3 months back, it was an unimaginable rate. Right. And now the rate has gone up tremendously because the yields in US has gone up, number one. Secondly, the SLR has been reduced tremendously to 19.5%. But the banks were having excess securities by more than 5 to 6%. Right. So the inflation is also going up. Yeah. The next step of RBI is also going to be a rise in the key rates. All these factors influence the bond yields to go up. Even though we are seeing the level as elevated, probably close to 8% will be the ceiling for this 10-year bond. Okay. And I do not expect by any stretch of imagination the yield going above 8%, because for the simple reason, for the next financial year, the government has to borrow 6,50,000 crores. Right. So if they have to pay 1% more, that will increase their liabilities much further, and the fiscal slippage will widen. For that reason, I think they will take some measures. RBI will take some measures, but they don't have much measures in hand. OMO sales is one measure. Yeah. Not issuing government bond is another measure. And the government wants money, so they have to issue it. And many of the issues have failed. Matlab, only 50% has been subscribed. Right. So that is the reason why the bond yields are rising. Bond yields are rising. And more importantly, the banks were already suffering huge losses on account of depreciation in the bond prices. So at some point of time, all the banks will be tempted to cut off the losses by selling the bonds, which will make the prices to climb again. That is why I put a mark of 8%.